Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. If you know me, you know that I absolutely love dividend paying companies. I love companies that grow that dividend every single year because that's one of the ways that we get paid. Of course, the companies can buy back their own shares and so on, which is absolutely wonderful. But I do like that passive income that comes from the basically dividend paying companies. And these companies, majority of the time, they have absolutely amazing business. They have excellent free cash flow and so on. So I'm going to share with you guys today 10 different companies that have increased their dividend recently. But before I do that, I would like you to, press that like button, subscribe to the channel, and if you have any questions, let me know. Click that notification bell so next time we release a video you don't miss. As well as that, join us on the Patreon account by actually, of course, supporting the channel however much you can. And of course, joining us on the Discord, getting hold of the Sharia compliant investing ebook, as well as all the other dividend trackers that we have. Now let's get started. I don't want to make the video too long, so as usual we've got the same headings more or less. The most important thing today we're looking at is the dividend latest increase. So these companies have increased their dividend quite a lot recently. Some of them are a little bit overvalued. Okay, so you're just going to have to make sure you do a bit more research and to find out if a bit more information about them. So if they're overvalued, of course, you just do your own research, and if they're undervalued, it doesn't matter, exactly do the same thing. But it's really important that you always do your own research. First company we're looking at is Nike. Nike has increased its dividend recently by almost 8.8%. The market cap right now is $164 billion. It has a wide economic moat. Current price is $107 per share. Dividend yield of 1.32. Payout ratio only 42%. And they have increased it by 8%, which is actually quite good. They have been increasing this dividend for 11 years in a row. They have dividend streak, and the 5-year growth rate of 11%. And the dividend streaks of 21 years. This company needs another 4 years and it will become a dividend aristocrat. The annual payout is $1.48. Safety is 99%. Profit margin of almost 10%. Return on equity almost 34%. And return on invested capital almost 20%. They have $4.4 billion of free cash flow right now. Total return in the last 10 years, we're looking at about 11%. Next year, they expect their earnings to grow about 17%. Then 14%. It's discounted right now about 22%. And the $136 per share is where the price is at right now, or what they expect, and the current price is $107 per share. Right, the next company we're looking at today is Roper Technologies. This company is a software development company, $556 billion market cap. It has wide economic moat. Current price is $528 per share. It has a dividend yield of just 0.51%. Payout ratio 17%, which is very low and absolutely amazing. The latest increase was about 10%, and the 5-year growth rate is 12%. The dividend streaks 30 years in a row, an annual payout of $3 per share. Safety right now 98%, and the profit margin almost 10%. Return on equity about 21% for profit margin, and return on equity 8%. Return on invested capital about 6%. Free cash flow right now, we're looking at about $1.4 billion. Total return in the last 10 years, we're looking at about almost 16%. Next year, they're expecting the earnings to grow about 10% and then 11% every year after that. It's fairly valued right now, according to Morningstar. $560 per share is where they think the price should be. Right now, $528 per share. So again, another single digit, but really good raise. The next company is Decton Dickinson and Co. We have not talked about this company at all in this channel before. It has a 68 billion market cap. It has a narrow economic moat. Current price is $236 per share. Dividend yield of 1.6%. Payout ratio 29%, and 4% increase, 4.4% increase recently. The 5-year growth rate is 4%, and they have increased this for 50 years. So this is a dividend king. Annual payout is $3.80. Safety 91%. Profit margin almost 8%. Return on equity about 6%. Return on invested capital about 3%. Free cash flow right now $2 billion. Total return in the last 10 years will look up 10%. Next year 11% growth. Expected 8% after that for the next 5 years. And again, remember, this is just estimation. This is not exactly what's going to happen. You never know, it might happen, it might not happen. Things can change easily. 28% discounted right now. $325 per share is where they think the price should be. Next company is one I own in my portfolio, ADP, that's automatic data processing, $94 per share right now. Is not the shares. I said 94. So market cap is $96 million. It has a wide economic moat. $230 per share is where the prices are right now, not 96. 96 is the 94 is the market cap. So dividend yield 2% right now. Payout ratio 60%. Latest increase was 12%, which is absolutely huge. Okay. 5-year growth rate of 14% and dividend streak of almost 50 years. Now, one more year, this company will become a dividend king. Kings are companies that have increased that dividend for 50 plus years. And it's wonderful to see this company. The fact that the payout ratio is a little bit higher, but the fact that they're still increasing that dividend, which is absolutely wonderful. The annual payout, you get $5.60. Safety is 97%. Profit margin 20% or 19%. Return on invested capital, return on equity, we're looking at 115%, and return on invested capital of 51%. So very profitable business. Free cash flow right now, $3.2 billion free cash flow, 13% total return in the last 10 years. They're expecting their earnings to grow about 10%, 11% after that every single year. Fairly value right now, $240 per share is where the price should be right now, according to Morningstar. 230 is where it is now. Now, before I carry on, if you have not subscribed to the channel, please do so, and of course join us in the Patreon account. Like the video, please, because it really genuinely helps the channel. Okay, as much as you can, do whatever you can to support the channel. Okay, next one is EOG, which is basically an energy company, 70 billion market cap, narrow economic moat, $121 per share right now. Dividend is basically $3.87. I think this is the highest that we've seen so far. So 3.87% of dividend yield, which is quite huge. Payout ratio right now, we're looking at about 28% only, and the latest increase 10%, which is really good. The 5-year growth rate is 36%. And they've only been increasing this dividend for the last 5 years, which is absolutely wonderful. The annual payout is $3.64. Safety 82%. Profit margin 33%. Return on equity 30%. Return on invested capital 25%. $8 billion of free cash flow right now. Total return in the last 10 years about 6%. Next year they're expecting their earnings to grow about 14%, and then after that about minus 1%. That could change. Anything can happen in the oil industry. Fairly valued, $132 per share is where they think the price should be. Right now is $121 per share. Next one is another company that's in the oil industry, ConocoPhillips, 133 billion market cap. It has a narrow economic moat. Price right now is $114 per share, and it has a high dividend of just above 3%. 59% in terms of payout ratio, 14% increase, which is again another huge double digit payout rate. The 5-year growth rate of 33%, and they have increased this dividend for the last 6 years. The annual payout is $2.32. Safety 61%, just the cutoff. The profit margin right now is about 19%. Return on equity, we're looking about 23%. Return on invested capital of 17%. $10 billion of free cash flow, about 6.5% total return in the last 10 years. They're expecting the earnings to grow about 16%, and then 10% decline after that for the next 5 years. Right now it's about 17% premium. $98 per share is where the price should be, according to Morningstar. Next one, Canadian Natural Resource, 69 billion market cap. It has a narrow economic moat, $64 per share right now. The dividend is the highest we've seen so far, and that's over 4%. Payout ratio 48%, 11% growth in the latest increase, which is again another double digit, which is huge. 5-year growth rate of 23%, which is absolutely amazing, and 21 years of increase in that dividend. $2.89. By the way, one thing I actually need to mention is the dividend kings, they have to be in the S&P 500, and of course have increased that dividend for 50 plus years. Okay, so that's the rule. It has to be in the S&P 500. So safety right now 70%, 20% profit margin, 18% return on equity, 14% return on invested capital, about $7 billion of free cash flow right now. Total return almost 10% in the last 10 years, 26% increase, 26% growth for in terms of EPS next year, and then a decline of 1% after that for the next 5 years. 7% discounted right now. $71 per share is where they think the price should be. Right, we're almost there. Please like the video if you haven't already. AbbVie is the next one. Again, this is one of the biggest pharmaceutical companies out there. 244 billion market cap. It has a narrow economic moat, $138 per share right now. Dividend yield of 4%, which is absolutely huge. The 5-year growth, the payout ratio is 50%. The latest increase was almost 5%. The 5-year growth rate of 17%, which is huge. 51 years of increase in that dividend. This was a spin-off. Okay, so they actually inherited the Abbott Laboratories, of course, the dividend king status. Annual payout we're looking at right now $6.20. Safety 70%. Profit margin of almost 12%. Return on equity 46%, which is absolutely huge. And then almost 10% on return on invested capital. Free cash flow right now $24 billion. Total return in the basically last 10 years we're looking at about 14%. They're expecting the earnings to decline about just below 1% and then about 4% every year after that. The reason this is happening is because this company has a drug and the patent has run out. So until they come up with the next big drug, whatever, because now the other companies can now develop that. So for that reason, has a little bit of decline. Fairly valued right now, $126 per share is where the price should be. Next company we're looking at today is Exxon, another energy company. 406 billion market cap, narrow economic moat, $103 per share right now. Dividend yield over 3.5%, payout ratio 35%. Latest increase was 4.4%, and the 5-year growth rate of 3%. Dividend streak was 40 years. Annual payout $3.80. Safety 80%. Profit margin 12%. Return on equity 21%, and return on invested capital we're looking at about 17%. Free cash flow right now $37 billion or $38 billion, which is absolutely huge. Total return, but these companies burn a lot of cash, so I wouldn't be surprised if that is all gone very soon. Total return in the last 10 years we're looking about just below 4%. Next year they're expecting the earnings to grow about 2%, then 42% after that, which absolutely makes no sense. Actually, it makes sense because they're acquiring another company for 40 billion or something? I can't remember. It must be them. I can't remember whether it's them or Chevron, but they definitely, one of them is acquiring another company for a lot of money, so that's probably what it is. I think it's them. And then 15% discounted right now, $123 per share. I will check that before we finish the video. And then finally we got Rockwell Automation, and that is another company that's increased its dividend. It has a market cap of $31 billion. Wide economic moat, $273 per share right now. Dividend yield just below 2%. Payout ratio below 40%. And they have increased that dividend about 6% this year, this fiscal quarter. And then for the last 5 years, the growth was about 6%. 14 years of increase in it. $5 is what you will get. And annually, if you own a share of that company, 70% safety, profit margin 15%, return on equity of 43%, and return on invested capital of 20%. Free cash flow right now just below $1 billion, and total return the last 10 years we're looking at about 11%. 8% growth expected next year, then 10%, 13% discounted, $315 per share right now. Now, there you have it. That's the 10 different companies that I wanted to share with you guys. You can pause the video here and take a screenshot if you need to, or do whatever you need to do. But these are the 10 companies. Again, some of them are overvalued. You have to be careful. If you want to do more research, of course, to find out a bit more information. So the companies that I own right now is the automatic data processing on this list. The rest of them I actually do not own. The ones that I would be really interested is Roper Technologies. I've been interested in this company for quite some time, but I've never got to it. AbbVie seems interesting right now. I like the fact that is basically, if it comes down quite a bit, I might actually look into it, because I do like the dividends. I like the company when it's, I'm sure the next couple of years they will come up a new drug that's going to boost their revenue and so on. So that will be interesting one to look at. And of course, this of the oil companies, I actually like EOG Resources. The fact that they're increasing that dividend a lot, and there's also yeah, that's the one that I actually like the most. Right, let's have a look at in terms of Sharia compliance side of things. You can pause the video. There's not one of them that makes me really concerned apart from these two here. Okay, BDX as well as ADV in terms of their interest-bearing debt, but the rest of them seem absolutely fine. You can pause the video and have a look. Right, now what we're going to do is look at, see if I can find any information on that, the fact that they were acquiring another company. I knew it was the announcement merger with Pioneer Naturals. Okay, so that's the Pioneer. That's, I think it was almost, there we go, about $60 billion. I think it was the price they agreed. There you have it. That's the basically 10 different companies I wanted to share with you guys. Like I said to you guys, I do own automatic data processing. That's the only one that I own in my portfolio of that list. Again, if you're enjoying this type of content, please join us on the Discord, join us on the Patreon account. Again, support the channel as much as you can. And of course, like the video, subscribe to the channel. Let me know if you have questions. Have a wonderful day. Assalamu Alaikum.